Okay, folks, welcome to Market Wrap for Wednesday, the 16th. Let's talk about the Fed announcement today. 25 basis point move, no big deal, as expected. Now, everything else is just it's just leading us into recession. So let's talk about. I love the way they put this together here. Dovish No BS Normalization Calendar Guide walks back on every meeting in 2022 being live for rate hikes and pushes back 50 basis point concern over sudden tightening of financial conditions. Ukraine growth stocks concern. We knew that was coming. The consensus of the Open Market Committee, the venerable governors of the Open Market Committee, BS Normalization Calendar Guide, every meeting live for rate hikes. Keeps doors open for 50 basis point hikes. Expects inflation to come down this year, albeit later than before. No shock. Out the window when transitory. Hawkish. BS normalization details. Guide for May. Start. Expresses appetite for 50 basis point hikes. Ahead front-loaded hikes, worried about inflationary impulse from Ukraine, concerns over long-run inflation expectations. All to do about nothing. I don't think that we're going to get 3 more rate hikes. Why? The yield curve. We are a stone's throw away from inverting. After the Federal Reserve announcement today, the yield curve, which is predicted every recession since 1955, with the exception of one, is a stone's throw away from inversion. When you invert, it's a sign of fear. Bond investors do not want to borrow, or I should say lend long the United States out 30 years. They'd only want to loan out for a shorter duration because they're worried about the future. So they want to stay very short with their investment in U.S. bonds. After the Federal Reserve announcement, this tanked. This is a monthly chart. For a closer up view, just to give you a feel for the price action after the announcement, we rolled over and rolled over hard. So the bond market is signaling potential recession. I highly doubt as we enter recession that we're going to be seeing 6, 7 more rate hikes this year and forget about 50 basis points. So he may be right about inflation coming down some. Why? Because of demand destruction. Yeah, as I've been saying, the cure for higher prices is higher prices. So if people can't drive, well, they don't need a new car. What happens to the price of used cars and new cars? Well, they come down because production plays catch up. The supply chain smooths out. New supply chains are built. And you can apply that logic to many different products out there. Let's move on. Okay, 10-year yield. Moved up higher today, but we saw some topping action. It could still move up higher, but this is looking a little bit like exhaustion. Maybe we'll pull back, put in a higher low, not quite sure. The TLT, bullish key reversal bar. So this tells me that this may result in a pullback, because this is an extremely bullish bar. The only thing I don't like about it is that it failed to close above 133, which is resistance. Tips rolled over and rolled over hard. Now, this is a picture of the tip market that believes that the Federal Reserve is going to do whatever it needs to do to fight inflation. Folks, they haven't even started rolling off debt off their balance sheet yet. They hiked by a quarter point. That is not aggressive. And I'll show you in a moment how gold sniffed out the dovishness in a heartbeat, along with the miners. The dollar, bearish key reversal bar. I thought we may be consolidating. I was worried about a potential rollover here. We got the rollover. This chart is telling you that what the Federal Reserve has stated it will do is not enough to salvage the U.S. dollar. The VIX crushed today. Why? Dovish Fed. The Fed gave the stock market exactly what it wanted. A little bit of vegetables, but a lot of dessert. The Dow Transports, huge move. Huge move. Up 5.5%. Look at the volume. Now, early on in the day, volume was running really low. But man, after the Fed announced, volume picked up in a heartbeat. The Dow Jones Industrial Average, massive breakout. This is what we were looking for. Now we need to see a pullback and a retest of some support levels. Volume, good. S&P 500. Our question was answered. We were talking about this last night. Were we going to see a higher low, or were we going to roll over on Stokes? That got answered today. We got the higher low. We also broke out on RSI, broke out on price. We stalled at resistance. Volume, about average. TripQs broke out today on RSI. Stokes beginning to break out, broke out on price. We got to get that pullback and a retest. Volume, very heavy. Now, the small caps, they were a major concern a few days ago. They had broken down below support over the weekend. I had expected a continuation breakdown, maybe a pop-up higher in an effort to recapture, and then it would likely fail. It didn't happen. We broke out. We're back into this consolidation range. Is this a screaming buy? No. We have resistance immediately above. On all of these charts, with the exception of transports, I believe, let's go back. Yeah, transports have a little bit more room to run. With the exception of the transports, all these charts have resistance immediately above. Technology, strong day, resistance immediately above. Did we see a lot of shorts covering into the close? Maybe. Volume was not wonderful on the XLK. Consumer discretionaries up over 3 1/3%, recaptured support. Volume strong. Energy, gap down. Yesterday, indecision day today, we were down on volume, biases to the downside for energy. Emerging markets skyrocketed today. This is because China bounced back. What were we up today? $10.60, very nice. Gold. Now, gold, this chart doesn't really do my observations justice. Gold was down on the day. We tested 1900. But if you take a look at the GLD intraday and you go to a 4-hour chart, look at that. You can see that the morning was horrible. There were 2 bars to the trading session. You have the first bar that was red, but that second bar was very bullish. Okay, gold. This is wrong. Gold closed up at 125.90, thereabouts. So this is an inaccurate chart. Let's go to the GLD. So what I mentioned earlier is that gold sniffed out that the Fed chair was FOS, full of you-know-what, and that they were not going to be aggressive fighters of inflation, and gold just reversed hard, closing at the highs of the day. So gold is going up. Now, as for our positions in the gold mining names, same thing here. Bullish key reversal bar on the GDXJ. NUGT, bullish key reversal bar, closing up over a 0.5 percentage point. GDXJ actually outperformed NUGT. That has not been the case during this past rally. NUGT has taken the leadership role, except for today. AGQ, silver, bullish key reversal bar. Stopped at resistance, but a bullish day nonetheless. Love it. SILJ, daily chart. Bullish reversal bar. More of a hammer formation, I guess, rather than a bullish reversal bar on second thought. But a bullish day. Volume declined. I don't like that. I don't like that price action today. I was hoping for better. Stokes still declining. Gold money. Bearish reversal bar. Very surprised to see this. It was up on the last look. Now it was down. Sad. Cal-Maine Foods. Rockstar. Big continuation breakout here. Volume strong. Let's take a look at the weekly chart. We are up over 11% on the week. Resistance is going to be at about $50 a share. That's where we're going. Love it. Now, I was asked about the banks. Remember we stopped out way up here? Is it time to get in? I don't know. 50-day moving average is declining. We need to see some backing and filling here. You start seeing that 50-day cross down below the 200-day moving average. It's a concern. And remember, banks like rising yields. But what did I just show you earlier? Yields, they closed up today, but they showed topping action. So if they pull back after the bullish reversal bar on TLT, remember, bond prices trade inversely of yields. So this looks like it wants to go higher. If it does, that will not be bullish for the banks. So we may get a pullback here. LABU, biotechs, we are profitable on this trade now. Looking good. What a move today. Over 14.25% move. RSIs hooking up. We're probably going to roll up those short puts tomorrow. I'm liking this a lot. Let's go to a 4-hour chart. Yeah, I really like it. LABU, looking good. Facebook, our Strangle is alive and well here. I think I need to roll up the put side. We have a profit there. Maybe we'll roll that up to about 185. We'll see what the probability calculators show us as being as a good risk-reward level to raise those puts up. Goldman Sachs, same deal here. We sold the 260 puts. We're definitely profitable there. We need to lift those, that strike up, maybe to around 318, around there. Again, we'll check with the probability calculator. McDonald's. The only one giving us a challenge today was McDonald's. So we did roll up our put side. We booked profits. This is the second time now. So while the call side is showing us a loss right now, we can't forget about A, we collected call side premium. B, we collected 2 put side strikes. So if you're seeing a loss on the call side, you got to take into consideration the profits you booked on the put side. So what do we do here? Not quite sure. I'm hoping for a pullback, ideally to retest 234. It's not out of the realm of possibility. In fact, I think it's highly probable because we have a lot of resistance above. You have your moving averages going the absolute wrong direction. We've had a big run off the lows. It makes sense we're going to get a pullback. Maybe not tomorrow, maybe on Friday, maybe next week. We may need to roll the trade. Look at volume. It was not great today. Let's check out the final 15 minutes of trade. Yeah, pretty bullish stuff. We closed at the highs of the day. So we may pop up higher tomorrow. OPTT closed up 5% on the day, looking good. This could be bought. We're getting higher lows. Uranium. I'm stuck on this one. We're long of it. I'm not a groveling bear over this. Not as much as I was last week. But what I do like is that we're holding the breakout point. We may pull back further here. I think it could be bought, but I wouldn't buy any more after that until we close above 26.66 because that'll put it to sight, the 29.89 mark, and then I would finish off my buying on a close above that mark. So really just want to leg into this position. And with that, folks, everybody have a great night, and I will talk to you tomorrow. Be well.